to another video. Now it's time for another weekly market breakdown. Now before we get started, if you are looking for signal services or mentorship, we do offer that as well, especially if you are trading a funded account and looking to pass that as well. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, please smash the thumbs up for the YouTube algorithm there as well. Now it's important to keep in mind that yesterday I have made an analysis. However, the price action literally turned around and we saw a massive dump on the dollar index there as well. Now I want to give you guys an update because why there has been some speculation that had taken place since we spoke yesterday, and I want to say that data or that information with you guys very quickly just so that you can understand what my thoughts are on the market at the moment. Now firstly, we are going to speak about this report that came through on Friday. It says here the Dow Jones closed 400 points higher but still performing below a 4-week winning streak as fear is on the rise. Now it says here stocks rallied on Friday but finished the week lower as investors drew conflicting conclusion about what the latest payroll number mean for future Federal Reserve rate hikes. Now, it's important to understand one thing, right? The idea behind what Powell is trying to achieve is he's trying to cool down the labor market. The only way to cool down the labor market is to basically hike the interest rates as high and as much as you can. Now, there is a couple of things that's currently taking place in the market that kind of is, starting to we slowly starting to see that things are not turning out the way that it's supposed to be. Now, we know firstly that we did see the unemployment went up from was up from 3.5% to 3.7%, but that's because in September we hit 315,000 jobs. This month it was lower, last month it was lower than it was then. That's why we went from a 3.5 back to a 3.7% there as well. Now we can also see that because of everything that's currently going on at the moment here as well, we now see that because the idea behind the Fed is to basically get people to not to lose their jobs, but for the labor market to slow down. And we can see that there has been some massive signs of cracks lately. Now, we've gone over the Amazon that says they will be pausing corporate, roles in the corporate workforce. Apple also said they will be freezing new hires. Elon Musk came out and he tweeted, tweet after after Twitter layoffs, no choice when companies losing, saying that if the company's not making any money, then they need to let people go. And this is the way in how they're going to cool down the inflation. Now, if there's one thing I want to bring to your attention basically is that we do have some CPI data coming through on Thursday. Now, if this CPI data does show some signs, then yes, there is a high possibility that the dollar index could potentially see a massive correction as well. Why do I say so? Firstly, the idea behind what Powell is trying to achieve is to cool down the labor market by hiking interest rates. Now, we know that there was an article who said that the bank had already given the go-ahead that they can hike interest rates by a 0.75 basis point, which is good. But now if the labor market is cooling down by people not hiring more people, if the CPI data comes through lower on Thursday, then there is a possibility that the Fed is not going to hike interest rates by a 0.75 basis point. And it is at this moment, ladies and gentlemen, that I can tell you that there is potentially a massive correction coming for the dollar index, and we could potentially see the stock market rally once again. Now, we're going to dive into exactly what it is that I'm trying to tell you. Now, we're going to look at the technical analysis, the technical data, and the two possible outcomes that we can expect from the market. Now, because we are waiting the CPI data, I do expect the dollar index to potentially continue moving sideways until that data comes out, and then, we could potentially see the dollar index, and that's on Thursday only. Now, if you look at the dollar index, if you look at this level here, now this is the level on the weekly time frame that the market had printed. which is a strong level of resistance, right? So we're at that level of resistance that had acted as support that the market had broken above. And if you go on the weekly time frame, we can see that this is that level that I'm referring to. Now you can see how this market had basically been moving sideways, and a lot of people, might have seen this as a massive dump, but it was still moving sideways. If you go down on the daily time frame, we can see that this is the way that the dollar index had moved. My anticipation is highly that the dollar is going to dip lower, then continue higher, move in this range until the CPI data comes out. Now, as traders, we have to always be reactive and not predictive, and we have to learn to adapt to whatever the market wants to give us. Now, that is the one way to look at this. Alternatively, if the dollar does slip below this level sometime throughout the week, then we can definitely expect the market to continue lower. Now, this is what I can tell you. If the CPI data pulls through lower, right? If we do get lower CPI data, then by all means, are we going to see this is if the CPI, sorry about my drawing skills, but if the CPI comes through lower, then the dollar is going to slip and have a massive pullback to the previous support on a monthly time frame. Now, if the dollar index, however, gives us a higher inflation, then by all means we can expect the market to continue lower. Now, there's nothing to get excited about at the moment because we are still moving sideways on higher time frames. Now, this is the way I'm going to monitor the price action. We have to be patient in the market and allow the market to give us a clear opportunity in which way it wants to go. Next up, we've got the S&P 500. The S&P 500 could potentially as well posing massive risk. Now, you're on the weekly time frame. What do we see? Now, from a weekly perspective, is we can see that the market printed support, broke below support, came back to test it as a resistance, broke above that resistance, came back to test it as support. Now, if you look very closely, what you can see over here is this market had also been in this zone that it had created over here. If you go on the daily time frame, and you can see this, we're at this completion of this information. Now, we have to, again, I do anticipate the fact that I'm expecting a potential slightly weaker dollar going into next week. Do I expect this market to continue higher? However, we are faced with a level of support there that's being tested as resistance. Now, there is obviously two ways to approach this. Now, this market could easily move back down, and that could be it, and then start moving to the other way. Alternatively, this market could just continue higher. This is all dependent on whether the Monday's candle close above that. Then by all means you can start buying the way to the upside. Next up, we have got the US 30. Now, the US 30 is sitting at monthly resistance. Now, monthly resistance has been respecting for quite some time. On the weekly time frame, we can see that the market had come back to test the structure, and we started seeing that pullback to the downside, also testing this structural level over here. Now, there's a little bit of uncertainty in the market, and not just from an investor's perspective, but also from a retail sentiment there as well. Now, what do we have here? Here we have a similar situation. Here we've got a level of resistance that got broken, tested as support, broke below support, came back, tested as resistance. By definition, this market is supposed to continue lower. Now, if we could also be in the start of a consolidation phase for the US 30 as well, as the market awaits that CPI data that is only about to release on Monday. Now, we could see that the Dow Jones also do this movement up until we get that data on Thursday. Yeah, we have a similar situation here, and this is, you can see here, we have a similar situation here where a market literally pulled back down. Sorry, that was just not right. Where this market basically came in, came down, came there again. Now, we can expect this to happen as well. In Monday, I do expect it to go slightly higher, hit that equal high, and then pull back again. Indirectly, expect the dollar to continue lower and then continue higher as well. The thing that we are sitting with at the moment is the market is not sure whether Jerome Powell is now more likely to hike interest rates as aggressively as he intended to, because the unemployment rate's going up, which is exactly what the market needs. High unemployment leads to lower inflation. But now that we saw a 3.7 unemployment rate, we have to see a lower CPI in order for the dollar index to break to either direction there as well. We got GBP USD as well, being faced with a structural level that it had tested many times before. And if you go look left, you can see here that this market also basically had been testing here. We had that breakout that pulled back, and now we're back into this range that we have created in the first time again. On the weekly time frame, you can see that, excuse me, let me just remove that. Boom. Now on the weekly time frame, this could ideally be the level that we would like to see, but because the market broke below the strong level of support and then came back to test it as support again, this is now putting them back in bearish territory. And it's for that reason that I do anticipate, yes, there is a possibility that this can go higher and then go back lower once again, because I do not anticipate the dollar to just give up, just start falling, because there's no sufficient data to back this theory up in the first place. There's only one of two things that you're going to do it. At the moment, like I was saying, guys, we just had a break in there. So I do expect the market to continue higher, because I expect it to continue lower on the DXY and then potentially pull back lower there as well. Euro USD, as you can see here, also reached the previous level of resistance back to test it as support. And this is also the level that the market had printed here as a level of support there as well. Again, highly expecting the market to move lower. Alternatively, the market could potentially, which is what I see due to a slightly lower dollar index, and then start that move to the downside there once again. Next up, we do have the Nasdaq 100. So the Nasdaq is very interesting. Nasdaq is trailing here at the bottom of the ocean, but again, I do also see Nasdaq potentially just hitting high, and then until we get that CPI. Remember, this is a very strong level for the Nasdaq. A dip below this level will make room for the market to go and test the previous levels. Now, that's all from my side, guys. Thank you for your time, and as always, cheers for yes.